Today's forum provides an opportunity for us to exchange lessons learned from one another's experience with financial market reform conducted in recent years. We are grateful to have a message from the Prime Minister of Japan, Mr. Fumio Kishida, this afternoon, and I think this may be the first time that we've had that at one of these events.
We will show you why you can be sure to invest in Japan, referring to Japanese fundamentals, the market's growth potential, and government initiatives of the new form of capitalism. Our distinguished speakers, including Ms. Amaya from the Japan Financial Services Agency, and Mr. Yamaji from Japan Exchange Group, will discuss the details.
家計の資金が企業の成長投資の原資となって企業価値が向上することにより家計の金融資産所得がさらに拡大する成長と資産所得の好循環を実現していきます。以上のような施策を大胆に実現していきます。改めて日本経済は力強く成長を続ける、確信を持って日本に投資してほしいとお伝えして、私からのご挨拶に変えさせていただきます。
With social issues such as climate change and aging population apparently becoming more pressing, building a sustainable society is an inevitable task for us. To achieve it, it is essential to promote sustainable finance and to enhance transition to new industrial and social structures. As one of the important pillars under the new form of capitalism initiatives by Prime Minister Kishida. What creates value added will be intangibles, particularly human capital going forward. Disclosure on human capital can encourage corporates to invest in human capital in a visible manner to stakeholders, such as investors. The development of global disclosure rules on human capital, which is an underlying source of economic growth, is a common global interest in the long run. In Japan, a new section has been added to the annual security report in order to provide information on sustainability, such as climate change and human capital, in an integrated manner.
Measures to revive the Japanese economy. The Japanese economy faces 5 problems. First, the earning power of companies is weak and growth is critically lacking. Second, the worsening of the terms of trade have led to an outflow of income overseas. Third, rising social security costs have depressed individual disposable incomes. Fourth, uncertainty about the future has led to slump in consumption, especially among young people. The third and fourth problems are all related to the social security system and the deterioration of the fiscal balance. And fifth, funds are stagnant in corporate sector, especially capital investment. The Kishida administration has implemented solutions to each of these 5 problems. Japan has 3 characteristics. First, labor market liquidity is low, and industrial and corporate metabolism is insufficient. Second, active labor market policies are lacking. Third, income redistribution through taxes and social security is insufficient and inequality is on the rise. In the future, Japan should implement a trinity of reforms in following three areas. First, Japan should accelerate corporate and industrial renewal to boost growth potential and labor productivity. Second, Japan should realize labor mobility without unemployment through active labor market policies. And third, income redistribution should be strengthened through an all-generation social security reform.
Do you think can we improve the birth rate easily? I don't think so, because of course there is a negative factors, but on the other hand, we have a very good story. Like we have variety of lifestyle, and woman has some options to be able to live alone or something. So that why this question is very difficult to solve. However, I would like to three suggestions that, to solve this population problem. The one is economic assistance for targeted. Two is flexible parental leave. Three is housing assistance. Mentioned about the carbon credit and the carbon pricing doesn't have not a root. So from now, we should do something, but my expectation is quite big in this field. Why? Because this one, potential reasons, we have some potential reason. The left and upper side chart mentions the number of patent applications related to decarbonizations. You see, the Japan is a green chart, so the number is quite huge. So this is our potential.
Some might think of CIC as co-working, and a lot of people know WeWork, but we're very, very different from WeWork. We've had decades worth of experience of building larger footprints in a city center, where we really have our own expertise in helping the collaboration between startups, entrepreneurs, mentors, VCs, and a whole group of people that are needed to really drive innovation. We have 8 campuses across 3 continents. Since we've started, we've had over 8,400 startups that have called CIC home. And with CIC and its affiliated labs, we've had over $16 billion in venture capital funds invested in the startups. So there's a question, why did we come to Japan initially? And next slide. I will just share that Japan is a top startup country. If you look at these numbers in terms of the number of companies in the top 100, companies in the top 1,000, Japan is right up there. And if you think about it, the Japanese people have been incredibly creative. You have all of these massive corporations that were at one time a startup. I could just list so many: Toyota, Honda, Nikon, Canon, they're Panasonic. They all were startups one day, and now you can see the amazing impact they have globally around the world, and you should be really proud about that. Next slide. Also, Japan is in the world's top 10 science and technology clusters. If you see, they actually, the PCT, in case you're not familiar with that is those are the patent filings and publications. And so you can see how strong Tokyo is with the new innovations that are happening. This is what gets us incredibly excited, about our work in Japan.
Today, the Japanese economy is in the midst of a big change under the government's growth strategy, grand design, and action plan for a new form of capitalism. TSE is moving in step with this change, aiming to unlock the Japanese market's potential as a platform for companies' organic growth and towards revitalization and growth of the market. JPX is accelerating its efforts and has implemented 3 main initiatives to kick off major transformation in the market. First is the market restructuring to build a platform for supporting listed companies' sustainable growth. Second is corporate governance reform. And the third is building a global and open market. These initiatives are leading the Japanese market towards further growth. Through the new market, TSE is committed to incentivizing Japanese companies to work on sustainable growth and value creation, thereby making the market more investable for both domestic and foreign investors. In 2018, only 30% of TSE first section companies had boards with 1/3 or more independent directors. But now that ratio for prime listed companies is 92%. So the number look quite good, but that's not good enough. The next step is strengthening the effectiveness of the government governance principles. And the key is the investors who directly engage with the listed companies. Additionally, to improve visibility of listed companies' progress on sustainability and other corporate governance matters, especially to foreign investors, information needs to be disclosed in English, and this is one of the biggest challenges for listed companies in Japan. TSE has been supporting listed companies to further improve English disclosure. In addition to publishing the practical handbook for English disclosure, JPX itself has acquired Script Asia, a startup company that translates transcripts of listed companies' investor events. One of our strongest focuses in order to keep this openness towards change at the high global standards is to actively work together with other global exchanges. Last September, TSE and NYSE signed an agreement to support cross-border investment between Japan and the US by collaborating in areas including product development, marketing, and information sharing. The sharing of information through this MOU helps us to expand the ETF product range, not only in the index-linked ETFs, but also active ETFs. TSE is open to new ideas, suggestions, comments, and encouragement. I myself am eager to be directly talking with market participants in the US, and we have our local office here in New York, so we hope to engage with you all and continue our constructive dialogue.
Tsumitate NISA is very successful to cultivate inexperienced investors. After year 2024, these impacts could be larger and more significant. In short, NISA is a core strategy of doubling asset-based income plan, and I believe NISA is a child of two policy initiatives which are very successful in overseas. One is UK individual savings account. ISA experienced reforms and revisions many times, and now penetration ratio into UK adult population is up to about 50%. In a sense, Japanese government wants to build NISA as a social infrastructure like UK ISA. Another model is US defined contribution plan. As I said, contribution way of Tsumitate NISA resembles to the US 401k program, although Japan has its own DC pension plan already. NISA is a core strategy for doubling asset-based income, and the usage or momentum for NISA is already upward. So, of course, there are many issues and barriers, but policy framework is set, and from now on, more attention should be paid to the private sector.
The last 30 years, there's been an attempt to tap into the Japan retail market by foreign asset managers, by Japanese asset managers, to convert this cash into investments. And of course they would. It's kind of the holy grail because it's the biggest liquid market in the world, bigger than the US in terms of liquid market. And as we've seen in some of your slides, the Japanese households have 2 quadrillion yen in wealth, 2,000 trillion yen in wealth. 54% is in cash, only 10 is in equity, and 4 in investment trust, which is like mutual funds. So really different from any other market. And for about 30 years, the Japanese government has been trying to incentivize people to move from cash into investments as well. And it really has not been a success story, and we know that from the fact that there is still so much cash. Then the government announced this new NISA, which starts 1st of January 2024. And I'm a cynic at heart. I look at the downside before the upside, but I really believe that this is a game changer, and it is huge. So why is that? First of all, it addresses the bits that I just said the other NISA didn't address. It is no longer complex. You can buy both. There is no restriction. Sumitate is the annuity type where every month you can pay in. You've also got the growth NISA. In fact, you can use your entire allocation for Sumitate or a portion for growth as well. It's now of significant size. It's 3 times the size it was before. And actually, for the average Japanese investor, the entire size may be all they'll ever need to invest. So based on the fact that there is so much available cash, based on the fact that this is a really strong proposition, and based on the fact that it will trigger behavioral change, this lack of impetus, will really change. I think that the doubling of that you mentioned to 56 trillion yen is really not ambitious. I think it'll be far outdoing that target. So I actually think that this is really, really interesting. So what does that mean for the Japan equity market? So currently, around 30% of the average Japan domestic investors' assets go into Japan equity, usually high dividend, and 70% outside. Actually, a lot of it to the US. There was an early understanding that if you invest in the US, you invest global. I think now that's changing a bit, but still US is a favored destination. But 30% Japan equity. So just doing the basic math, this will have a massive impact on the Japan equity market, just from that perspective.
The 10-year JGB sitting around 50 basis points is a third of the yield that was available in June of 2000, which is when I joined Morgan Stanley in our Tokyo office. That's not the type of interest rate environment that's going to attract capital. And the reason why that is a problem for this idea is because to the extent that interest rates outside of Japan continue to march higher in the United States, in Europe, the interest rate differential is going to make it increasingly difficult for the yen as a currency to perform. And for international investors, if they don't have some view that the currency is going to perform and the hedging costs are prohibitive, it's very tough to take a dollar and buy a yen and not have to worry about your carrying costs. So you need either the interest rate environment to change in Japan, you need the amount of assets that are investable to increase, or you need the view that the yen is going to strengthen. And all 3 of those are difficult to see in the near term. So that's generally why I think international investors aren't paying as much attention to this particular program, the changes to the NISA program, as maybe they should be. But once price action starts to confirm what Stephanie was talking about, everything seems to be a momentum trade these days. So if price action can begin to confirm some of the positive developments with NISA and the doubling of asset-based income plan, then eventually the foreign capital will find its way to Japan.